Hey everyone, happy January 13th, Tuesday. It's Evan from the Trade Risk, and I'm going to do a little midweek video recap here. Now, if you were a bull today, you couldn't be that excited. You pretty much had everything you wanted this morning at the open. We had a nice gap up, potentially trapping yesterday's, bears that were taking shorts home. Um, for the day after yesterday's gap fill and sort of a heavy session. And you'd figure that the Bulls could really use this gap this morning and as fuel and make some progress or at least stabilize, in here above this 204 level. And you can see we basically had an impressive first hour, and then from there it was just a complete meltdown, taking out yesterday's lows, ultimately finding some support down here at the low 200s and bouncing off of them to close the day. But by and large, definitely a very sloppy session. If you're a bull, I think it speaks to the market environment we're in. Just a messy, range bound kind of tug of war area. And it's yet to be seen who's going to come out the victor. Really the big goalposts to have on watch is this 208 level on the upside, and 199 on the downside. I think those are the big extremes that you need to be watching for the larger move. And we may not get that until perhaps post earnings, before we get through some of the bulk of earnings season. But it's yet to be seen. But for now, just a very messy session, and I think it definitely could have frustrated both the Bulls and the Bears today out there. Let's take a look at the IWM. It's pretty much a similar camp. It actually did manage to close green on the day. You can see a long tail from the lows. It's still just contending with a lot of supply in here, and it's equally as messy. Really, it needs to get above 120 or below 115. I think those are the big levels to have on watch for the intermediate to longer term trends to be influenced. The biotechs, which IBB, which is the index, tracks a lot of the big biotech stocks. This has been the leaders. This has been the leader in the market recently, and you can see today it did close marginally in the red, but essentially flat on the day. It tried to get going, made new highs, and then got rejected and closed back inside of sort of this mess here. So again, I think biotechs are, it's a good index because it has been leading so much in the recent months, year really. It's an important market to watch and to gauge. Maybe some of the action in the indices going forward. So I think 310 getting back below this level, this breakout bar we had is still holding up. So let's just see what will happen with the IBB. Into some other markets, TLT, again trying to push new all-time high or new highs here, which are new lows on rates. Not so successful, closed flat on the day, but you can see that it's still pretty pent up here. You can see there's definitely inflow here. Look at just the way these candles look in this formation. You can tell that there is some urgency to get in here. There's money that's flowing into TLT. Long term, perhaps it doesn't last, but for now, it's still working higher. Let's look at oil. It had a bounce today. Same song and dance here. Strong downtrend. You're going to have a couple of green days in between. Eventually, one of them will amount to something, but let's see if the bulls tomorrow can add on to this. I think above $18, and then ultimately above 1860 or so, where it carved out a few day resistance around 1860. That'll be a interesting action area, but again, it's a long way from a healed chart. Downtrend remains intact, bounces along the way, so you can trade it accordingly. Natural gas, yesterday I posted this chart saying we got a nice new momentum breakdown. You can see that was just a trap. Today we came in, gapped higher, and then just pushed higher for the rest of the session. So it looks like some of the natty gas bulls are stepping up, and perhaps that trapped enough and maybe capitulated some of the recent longs, and maybe this can start to carve out a base and get going. For now, similar to oil, it's in a downtrend, not as severe, but still pretty steep. It needs time to repair itself. You'll have your bounces along the way. Gold, looking good recently, and it basically is contending with some recent overhead supply right around 119. So you can see today it tried to push above it, got rejected, but again, in the short term, this uptrend is still firmly intact. So, look to see if it can base out and head higher. For now, longer term chart is still pretty sloppy, but near term it is trying to stabilize and retrace to the upside. Silver, I was watching this 1595 level. I would have gotten involved. I didn't. Just the gap today didn't feel like chasing it, and I'm not in it, but it does look good. Again, uh, pushed higher today, tried to challenge the highs from last year, December of last year, and it pulled back just a little bit. But otherwise, still looks good. This gap is in place, and 1660. This level here is a pretty big level because it does have this range that got carved out in October here to deal with, and then really $18 is the next big target for silver. So bulls are trying to get it done there, and we'll see if they can continue it. Some individual names, we had a lot of these tech names that held up pretty well today. They actually were green on the day. Apple up about 1%, $1. Again, it hasn't changed the picture. Still stuck inside of this sort of chop box here. 108. 106 really. This 106 to 108 band of support. 114 on the top. Until something changes there, it's a bunch of chop. Google hanging out at the lows. Look at a weekly chart here. Look at this gap. This is a big gap up here. The weekly bar is not exactly showing it. Let me zoom in. Yes, here we go. So, it's trying to hang on here. $500, $495. This is pretty important support for the long-term trend in Google. So maybe it's time that this gap gets filled, but we'll have to wait and see. Still pretty weak, but it was green on the day. Netflix, again, weak, but green on the day. I actually did take some home short today, and not exactly my A plus cup of tea setup, but on my weekly recap on Sunday, I posted the short setup I liked in Netflix below 325. This was back. This was back this past Sunday. So yesterday we obviously got that breakdown. I missed it, but I did get involved today. We'll see. Basically for Netflix, I'm keeping things real tight, but if it's below this 330, 325 to 330, if it's below there, I like the amount of supply that's above it. So I'm going to look for price to continue to trend lower. And I'll be quick to stop out if it doesn't. So it held up pretty strong today, and that's usually why I would avoid it, especially on a day that the markets were red. But I took a shot with it, and I'll be quick to exit if it doesn't work out. Facebook, looking sort of heavy here. $76 is a pretty important point in control. You can see all the closes. Or bounces at the $76 level going all the way back to, third quarter of 2014. So this is an important action area coming up for it. And then, more so below $74, $75 is when you start to get into some more trouble. But for now, Facebook's hanging in there. I'll have to see what comes of it. Twitter, this one's been the impressive mover for 2015. Had a up session today. Couldn't really make too much progress above yesterday's highs, but it's still hanging pretty well above $39. Let's see if it has some more time to set up. 42 is the next big target in front of it. FEYE, FEYE. Here's one that looks real good recently. Take a look at this weekly chart, and you can see it's trying to break out here of this range that it's been in for basically almost the entire year of 14, and it's trying to make a move right now, and it's in the process. Really above 34 is where it needs to stay. You could see it did get pretty good shake today, down 3%. So underperformed today, but has been looking good as of late. So keep an eye on FireEye going forward for some more setups. Uh, Alibaba, this one back to the lows here. It's going to be, it'll be interesting to see if $100 can hold again. It's still pretty much, it's still in this downtrend, this sort of consolidation, this flag. If you look all the way back from last year, from this $83 run, again, big picture, it's still, can be considered healthy. Just depends on the time frame and how you're looking at it, but it's certainly not that actionable right now. $100 seems to be the big level to see if that can hold. GoPro just got annihilated today, took out the previous lows here around $54. So this one, I honestly don't know if there was news on it today. There probably was, but it definitely looks in trouble. Again, it depends. If you're looking at this on a weekly chart, maybe it doesn't look so bad. If you're looking at this big impulse leg all the way down from 40 to 100, you've now retraced about 60% of it. You don't want to see it go too much further, but definitely momentum strong to the downside. 12% days is just a big day. So see what happens with it. Tough to chase it on the downside here, but perhaps it can start to stabilize. Some of the casino names tried to get going today. LVS was green, but tried to poke its head out above this $56 level. That's been pretty important. Couldn't quite get it done. Wynn Casinos, same thing. 153. This is a pretty big area for it. This is the top of this bounce back in December of 2014. So still a pretty damaged chart when you look back at it over the past year, but let's see if it can start to reverse. XLF, so a lot of the weakness has been in the financials here. XLF, you can see was only red by 30 basis points, but look at Bank of America. Some of these larger banks really breaking down here. Yesterday could have been your line in the sand as sort of a last line of defense that needed to hold, and the fact that we broke below yesterday's lows definitely wasn't a good sign. Look at a weekly chart. You can almost look at this like this this rising channel here starting to break down, which would be a real bad sign if that's the case. JP Morgan, not quite the same, but still very, very damaged. Citigroup, Goldman Sachs, they've all been pretty weak for this year. And I guess that's not so surprising when you have rates that are just hitting new lows, which isn't good for that industry. What else do we have? So we had Alcoa report today, or last night, I believe, and it wasn't that bad of a reaction, but the market wasn't that pleased with it. You could see down 2.5% on the day. And a lot of these steel stocks and metals, letter X, for example, really staying weak after just a real long downtrend that it's been in. FCX, what do we got here? Oh no, not FCX. FX. I don't know what I had there, but some of these plays have been pretty weak off of the earnings for Alcoa. Some setups to look forward to. CDK. This is one that was pretty strong today, up almost 2% on the day, breaking above this 41.5 resistance level it's been banging up against for about a month. So, a fade off of the highs wasn't the strongest close, but could have some more fuel in the tank if you believe the markets can stabilize here. Keys, this one, I actually got stopped out of this one today just because I was keeping things sort of tight as everything was unwinding in the afternoon. I was in it yesterday. I got stopped out for about break even or maybe a small loss. But it did end up closing. It got a pretty good bounce into the close, so that one still looks good. And MLNX, this one, again, not the strongest close. Look at a weekly chart, though. This is an impressive weekly chart breakout. So, you want to keep this on watch. Maybe it goes sideways here and then starts to work itself out above $47 again. Keep that on watch. And that's it. That's all I have for today. So good luck trading. It's tricky market, especially for my style. For momentum, it's tough to keep momentum in here. So it's trying not to get overly chopped up and overly aggressive on one side or the other. So good luck trading. Make sure you check your earnings dates on any of your holdings because we are in that time of the season. And best of luck trading. Thanks for watching.